Hello everybody, I'm up here again. Welcome back to a new video, new Sunday, new video. Welcome back on my channel. Today we are inside again, and today we're gonna talk taxes. Taxes when you are investing in Germany. As a disclaimer, I'm no financial advisor and I'm also no tax advisor. So always keep that in mind. Information might be outdated. Please check that before you base your investment decisions on what I'm saying here. So let's get right into it. Taxes when investing in Germany. On the left side, I present you the taxes there are. There's a flat rate withholding tax. That's the most important tax, with its two siblings, the solidarity tax and the church tax. Then we have tax at source. That's what every country has. And then we have an advanced lump sum tax that was new in 2019. And then on the right side, I present you all kinds of other stuff related to taxes. For example, the non-assessment certificate, the lump sum savings allowance, and the exemption order for capital gains. We're going to talk about all of this. Don't be afraid. We will get through this jungle together, and I hope you feel comfortable to start investing after watching this tax video, because the good news right at the beginning is most of these taxes are automatically done for you if you choose a German broker. So you don't have to do tax declarations for yourself normally in Germany when we talk about taxes on investing. Yeah. And speaking on investing, what are taxable events when you are investing? So taxable events, of course, there are taxes on price gains. So if you buy a stock for $100 and you sell it for $150, there's 50 euros or dollars in gross profit. And as soon as you sell the stock, of course, then that's a taxable event, and the price gains are taxed when selling. That's for stocks, ETFs, REITs, and so on. Then there are also, of course, dividends, and dividends are taxed when they are received. So if you have, I don't know, Coca-Cola stock and they pay a dividend, then the German and the American government, we will talk to that, take their share from that. Yeah, and dividends you can receive from stocks, of course, but also from ETFs, even though they're not really called dividends, they are distributions or REITs again. And then the old interest payments on your bank account. So when you get these very small interest payments nowadays, they are technically also taxable events when you receive those interest payments, yeah, but not really relevant today anymore, but just to be 100% compliant here. Then new in 2019, as I said before, are the book gains of mainly accumulating ETFs that are taxed, that are kind of taxed now in Germany. And these book gains, so let's say you own one ETF and the price of this ETF is $100 euros in January, and then it's 120 euros in December of a year, and then you have to pay a small tax even though you didn't even sell any shares. Yeah, and that's going to happen at the end of every year, but we're going to talk about that in a second. Then also, just to point that out, Bitcoin and other cryptocurrencies are taxed differently from what I am explaining to you today. Let's start off with the most important tax and also the most major one, and that's the flat rate withholding tax, German Abgeltungssteuer. Is a new concept that it was implemented in 2009 or 8. So since then, no matter how long you have been holding a position, it's always taxed 25%. So 25% of your gains you have to give to the German tax authority. And it's actually a little bit more than 25% because the financial tax, if you will, is 25%, but everybody also has to pay the solidarity tax. That is a 5% tax that was implemented to get the German Democratic Republic when we got together in 1990 to build up their infrastructure again. That's what this tax was originally there for, but it's still there today for investing taxes. So that 5% is not added itself, but the 5% on the 25%, and that leads you to 26.375%. And then it depends on if you are in the church. So if you are in the Catholic Church or if you are in the Protestant Church in Germany. If you are, then you also have to pay church tax, and how much church tax you are paying or you have to pay depends on a little bit on the province you live in. So if you live in Bavaria or Baden-Württemberg, then it's 8%. And if you live in the rest of Germany, it's 9%. And that obviously leaves you with either 27.82% or 27.99%, but only if you are in the church. If you're not in the church, then you don't have to pay that. And actually, many people step out of the church just for this reason. Basically, what you should take away from here is if you're not in a church, the tax rate is about 26.4%. And if you're in the church, it's about 28%. Yeah, the tax rate that you pay on your gains. Yeah, only on your gains, not on the amount you sold. Okay, keep that in mind. That's the most important number in this whole presentation. Then there's actually a way to pay less than 25 or 26 point something percent in capital gains taxes, and that is with a non-assessment certificate. So basically, I'm saying if your personal marginal tax rate is below 25%, so if your income tax rate is below 25%, then you can apply for the non-assessment certificate, and then your capital gains will only be taxed with your income tax rate. So for example, if you are a student, yeah, you normally don't work and therefore have no income and therefore basically no income tax rate. And then you can apply for this non-assessment certificate and pay, yeah, then it's up to a calculation, but it's definitely lower than 25%, maybe then 10% on your capital gains. So that's important to keep in mind if you are without a job, student, or maybe even retired. Okay. Then we have tax at source, and that's not something that is unique to Germany, but as far as I know, every country has that. Yeah. So on the left here you see a dividend that I got from Texas Instruments. Texas Instruments is an American company, and you see that Quellensteuer or tax at source was deducted, and that's a tax that the American government takes before this dividend even enters Germany. Yeah, so they're saying that's an American company, they made profits, and we're taking this share from the dividend. So German government has nothing to do with it. And that's different. That's actually also very different for every country. So no matter if it's America, if it's Canada, if it's EU countries like Italy or France, it's always different. Always got to look that up because especially if you are investing for dividends, then you should look out for that because you can get a nasty surprise if you only receive like something like 50% of the gross dividend, because there's so much in tax at source you had to pay for example, your French dividend paying company. So to the bullet points on the right, it's only for dividends. Yeah, so tax at source is not for price gains. That's the good point. It's for both stocks and ETFs. The tax at source depends on the respective double taxation agreement. So that's what I said. And for example, this double taxation agreement between Germany and the US is 15% tax at source that the US takes. And this whole tax of source thing is mostly not relevant to ETFs, because they are for this exact reason most of the time set up in countries like Ireland or Luxembourg, where Germany has, or where many countries have good double taxation agreements. So that's why with ETFs you don't really have to care about tax at source. That's actually a pretty solid pro for ETFs versus stocks, if you ask me, actually. Then there is also tax versus offsettle part. So I'm saying that, for example, here, the US takes a share of 15% of my dividend. Yeah. And then this dividend comes to Germany, and the German government takes 25-ish, 26% again. And that's not the case, because this 15% or this 15% tax at source is often offsettable with your German taxes. So that's what leads us to the point that tax at source is often less relevant if you cross the lump sum savings allowance already. What that is, we are seeing in a second. But what this basically says is if you are a more mature investor anyway, then most often it doesn't really bother you, because this 15% from the US is fully offsettable in Germany. Yeah, that's not always the case, but for the US, which is a very, very important investing market for Germany, that's the case. So as soon as you become more mature as an investor, you don't really have to care about this anymore, at least for countries like the US, not for every country. It's not always the case that the tax at source is fully offsettable with your domestic tax rate. So then we just spoke of the lump sum savings allowance. Let's continue with that. So that's in German we call that Sparerpauschbetrag. Actually, I think the German names of all of these things are a little bit easier for once than the English ones. But just to let you know, in case you read that somewhere online, or you need to talk to someone at your broker or bank, you also get the German names. And the lump sum savings allowance is a 801 euro capital gains exemption for every year. And when you're married, this amount is not 801, but double, or 1602 euros. Yeah. So how do you set it up? You set it up by you can either set up this amount for just one broker, yeah, or you can split it up between brokers and bank accounts, because remember, the bank accounts used to, or today, pay very little interest payments that are technically also taxable amounts. So here, as I'm always suggesting, broker A, Trade Republic, you have a second broker account at Smart Broker, and then you have a bank account, for example, at DKB, and you give 400 euros of this lump sum savings allowance to broker A, 350 to broker B, or for example 51 to the bank account, which is quite high, should be like more like 10 euros max. because there's no interest currently. And just make sure that you always end up with maximum 801 euros. Yeah, that's the important part. And just to remember, please set it up. It's most of the time it's easy, and it's really just bare cash. Yeah, because if you're not using this every year, then you're basically wasting 801 euros of tax-free gains. And then let's talk about advanced lump sum tax. For Abpauschale, that was a new invention of the German government in 2019. And what that does is, it's for mostly accumulating ETFs, sometimes for distributing ETFs, but mostly for accumulating. And that is because it was implemented or invented to reduce the tax deferral compared to distributing ETFs. So to make it less relevant if you are investing into accumulating or distributing ETFs. So this was a hit for accumulating ETFs, and now distributing ETFs and accumulating ETFs are basically on par as far as taxes go. And this advanced lump sum tax is deducted right from your offset or allocation account of your broker. So that's why you should always make sure to have a small amount of money available on your offset account, especially on the end of the year, because that's mostly the time when these taxes are deducted. And I can't give you any numbers now, because this number also changes from year to year and is depending on the ETF you have and so on, but it's not a number you have to worry about. So I just typed in some numbers in the calculator, and for example, if you had a ETF, 100k ETF, 100k in an ETF, and in the beginning of the year it's worth 100k, in the end of the year is worth 107k, the only advanced lump sum tax you have to pay is 9.05 euros for 1 year. And then, of course, in the next year it starts again. And of course, if there are no price gains throughout the year, meaning you start with 100k and the ETF hits 98k at the end of the year, then there are obviously no advanced taxes to be paid. Yeah, but just a reminder, if you're using an accumulating ETF, have a small amount of money available on your offset account. Otherwise, the brokerage might come and ask you for this amount in the end of the year, or they might even start selling some of your shares of this ETF to pay these lump sum taxes. Because remember, if you choose a German broker like Trade Republic or Smart Broker, for example, they handle all the taxes for you. You don't have to worry. The only thing you should do is this right here: set up your lump sum savings allowance. But even if you don't do that, you're missing out on tax savings, but it's still nothing technically wrong with that. Yeah. Okay, and that's it. I hope you learned something today. I hope you feel confident now to start investing in Germany. And if you have further questions, enjoy memes, or need some other kind of help, feel free to join the Telegram group. I'm going live there in a voice call from time to time as well. So you can just scan the QR code now, or hit the link in the description. With that said, thank you very much for watching. I see you next Sunday. And remember, just be lecker. Bye bye.